Hey everyone, this is Jorgen with survivingthefuture.com, and today I want to talk about what's up with the gold and silver, the prices and whatnot. Why is there such a big hype about it? Okay, right now the spot price or the base value of the metal, that's what spot price is, for gold is $1,247.70, and for silver it is $19.90. This is per ounce. Okay, so 1 ounce of silver is $19.90. If I wanted to buy 10 ounces of silver, it would cost me $199. If I wanted to buy 10 ounces of gold, it would cost me $12,477. Okay, and so gold is obviously a lot more expensive than silver. But why is silver such a good investment right now? Let's look at this little ratio. Okay, this is pretty important. This ratio is how many ounces of silver equals 1 ounce of gold in value. So there's 62.7 ounces of silver that equals 1 ounce of gold in value. And this ratio, that's what it is today. Right now, September 10th, it's almost 6 o'clock Mountain Standard Time. All right. Now, historically, this value has maintained 16 to 1 instead of 62.7 to 1. So why is it 62.7 to 1 instead of 16 to 1? That's the big question. And I'll get back to that in another video. What would happen to the price of silver if the ratio would go down? And the way that I'm going to decrease this ratio so it goes closer down to 16 instead of 62 is increase the value of silver. So let's say we go up to $30 per ounce. Watch. See that? The ratio decreased. If I go to $40 per ounce, the ratio decreases. If I go to $50 per ounce, it's still going down. 60, 70. If I went to $78 per ounce, that makes it so our ratio is 16 ounces of silver to 1 ounce of gold. And that's at $78 per ounce, which means to buy 10 ounces of silver at that price, it would cost you $780. Okay, but that's not what the price is today. The price today is $19.90, which makes it close to $200 to buy 10 ounces. So what would you rather pay? $200 for 10 ounces of silver or $780 for 10 ounces of silver? I'd rather pay $200. So get in while you can, while this ratio is still high. Because as soon as the ratio starts going down, because silver price is increasing, then you're losing money. You're losing time to buy at a good price. That's what I mean by you're losing money. Okay, so while it's still down at this price, you need to buy as much silver as you can. Now, if you look at the historical charts for silver, the price, it's increasing steadily. Okay, if you look at it at a 24-hour basis, it fluctuates, goes up and down a little bit. Maybe it fluctuates in weeks, in week charts as well, like Monday through the next Monday. But if you look at it month to month, or 6 months to 6 months, or a year to year, you'll see that it's steadily growing and it's increasing. So I would invest in silver. Why would I invest in silver? Because its value is increasing while the value of the dollar is dropping. So imagine with me if you have if you want to buy a loaf of bread, say for $2, with all the economic stuff that's going on right now, with inflation happening, with unemployment rates rising, with costs of goods rising, all this crazy stuff happening, the dollar won't be able to buy what it used to. So if it took you $2 to buy a loaf of bread, it's going to take you $2 to buy maybe a couple slices of bread. So if you wanted to buy a whole loaf of bread, it would cost you a lot more than just $2. And that's what I mean by the value of your dollar decreasing. Okay, so if you've got your money saved up in an IRA or Roth IRA or whatever, it's good to keep your money safe and to earn interest on it. But the interest compared to the rate of inflation, good grief. The money that is in your savings accounts, your checking accounts, your IRA accounts, what is it going to be worth when inflation keeps growing, when the purchasing power of your dollar decreases? How much is your money going to be worth? You don't want to wake up one day and your $40,000 in your savings account can't buy what $40,000 of used to be able to buy. You don't want to wake up and have that happen. And when that happens, there's no way of getting your money back, because money in America right now and all around the world, actually, it's called fiat currency. And fiat currency it's just paper money and coins that really aren't worth anything. They represent something of value, but the real value it's not worth anything. That's what fiat currency is. If you have a dollar bill, a $10 bill, a $50 bill, $100 bill, $1,000 bill, realistically, it's just paper. It's just paper. But if you have gold and silver, that's the real money. And when the dollar loses its power to buy food, to buy gas, to pay your bills, what are you going to be left with? Now, right now you can't pay your bills with gold and silver. You can't buy food with gold and silver. But what you can do is you get gold and silver now, and as the dollar decreases in value, and as gold and silver increase in value, trade your gold and silver back for fiat currency and pay your bills. It's an insurance policy. That's what gold and silver is. It's an insurance policy. The Federal Reserve Chairman, Ben Bernanke, however you want to pronounce it, said a few weeks ago that he will do whatever it takes to keep us from going into a depression. What does this mean? One obvious answer is this: he will print more unfunded paper money and pump it into the economy, which gives us the results of inflation, higher prices for everything, and lower purchasing power of the US dollar. What does this mean to you?